Niehuser, founder of Beacon Rock Research, and with me is David Wolfin, President and CEO of Coral Gold Corporation. That's ticker CLH on the Toronto Venture Exchange. And David, how are you doing? I haven't seen you since the PDAC.
Great, Mike. Thanks for having me here.
Well, why don't you tell us a little bit about Coral, because it's in elephant country. It's in one of the best places to mine, but I don't want to hear myself talk. Why don't you tell me about it?
Well, Nevada is ranked 4th in the world for gold production, behind China, South Africa, and Australia. So that alone says a lot about the region. We've been there for 2.5 decades. We've done hundreds of thousands of feet of drilling, and we've identified 3.5 million ounces of gold.
Well, that's one of the interesting things too, that a lot of the upside in investment is in the discovery phase where it goes from nothing to something, but here you actually have, I think, an historic resource of pretty good size. And why don't you give us a little bit of time about what you have to do to get that resource upgraded, the time schedule, and who that would be important to?
Well, we've got 3.5 million ounces of gold, but that was using a base case of $850 an ounce. Currently, we've hired an independent engineering firm. They're working on a PEA, that's a preliminary economic assessment, that's like a pre-feasibility study. That is scheduled to be due in September, early fall, and that will lay a roadmap towards production. It'll contemplate the economics, what it will cost to build a mine, how long it'll take, and we're going to follow those guidelines. We've also applied for a blanket drill permit to drill up to 500 drill holes. Next year will be a big year for the company because we'll have a couple drills turning.
So right now you have enough drill holes to be able to complete the PEA. That's not a problem with what you have already.
That's correct. The PEA is just waiting on metallurgical test work.
So you're really trading now at more of like an exploration story, when actually you're going to jump really quick to the PEA phase once that gets completed.
Absolutely, and the plan is to fast track to final feasibility study over the next year to 2 years. A lot of work was done in the 1990s by Amex Gold, which is today Kinross. They did an independent feasibility study at that time, and we're just verifying that information.
And one of the interesting things that we talked about in Toronto was that because this isn't a greenfields project, the permitting's a little bit different than it would be as if it had been disturbed. And I think there was actually a small mining operation here. So yeah. Could you enlighten me to how, again, that's different from a greenfields operation, and benefits and negatives?
Yeah, we built a small leaching operation there in 1988. The share price of the stock went to $10 at the time. But during the 1990s, we had partners, Amex Gold and Placer Dome, and then we got it back in 2000 when gold was at its lowest level. So what we have to do is file a plan of operation, which is an independent report dealing with environmental issues. And so we've been complying with that and working on that as we go.
So a plan of operation is a more grand, big picture, it sounds like it's a much larger program and gives you a lot more flexibility to do a lot more, as if you had actually disturbed it and it's not like you're coming in and this is the first time it's ever been touched.
Correct. We recently filed a new APO, an amended plan of operation, and we're just waiting on the results for the environmental assessment. We're studying some of the environmental issues down there with the rodents, and we got to satisfy the NDAP on that regard, and we're doing it. So that's a few more months, and hopefully we'll get our permits granted later on this year, hopefully.
So the 3.5 million, is that a historic resource, or what was the level of classification there?
It's an inferred resource, but some of that dates back in the 1990s. We had proven reserves. So we have to go back and reconfirm some of the work that Amex did and some of the work that we did in the past, because it predates 43-101.
So the drilling then that you hope to start here in the coming year, that'll both upgrade the classification. Are you hoping to add ounces?
Absolutely, and increase the grade. 95% of the drilling that gave us the 3.5 million ounces was RC drilling, reverse circulation, and that's not as accurate as a core drill. Core is more accurate, and we did 15 holes last year, and in the core results, the grade was sometimes double or triple what we've reported.
And you were kind of hoping to do a few holes this year based on some of the gray areas, but it looks like you're really going to do this thing carefully, meticulously, so that you stay on the right side of regulators and the state and so forth?
Yep, we've been operating like that for the last 2.5 decades, so we won't deviate from that. We've spent collectively over $25 million on the property. I think there's about 1,160 drill holes, 500,000 feet of drilling, and over 100,000 fire gold assays.
So we're looking at a PEA this year, permitting, so we'll be looking at lots of drilling next year, I suppose. And then take us, where do you go from there?
Well, we move it to final feasibility study and then look towards building a mine.
So you're hoping to have the option then, or working toward the option of either building your own mine, or if you are acquired along the way, if it's a matter of price, then that might make sense as well.
Well, everyone looks at what's an ounce of gold worth in the ground and to who. If your resource is near an operating mine, it would be more valuable to them because they don't have to build infrastructure. Recently, Newmont bought Frontier, and I think the number that's circulating around the show is around north of $200 an ounce in the ground in situ. We'd like to see the value of our company up near that range, and if a major wants to take us out at that price, we would consider it.
So really, I don't want to arm wave too much, but it looks like there's some bona fide things that are happening, scheduled to happen in the next couple of years, and that'll put you in a place of maybe operating a mine, positioned to being understood, so maybe a major mining company. And of course, you're right above another great mine right now. You want to tell me a little bit about that, your neighbors?
Well, yeah, there's the Pipeline mine right beside us and the Cortez Hills mine. Pipeline produced about 12 million ounces of gold. It was the jewel in Placer Dome's crown. It represented 1/5 of their annual production. Cortez Hills, Barrick is spending $650 million bringing that mine into production. It's going to be another million ounce a year producer. So these are giant mines surrounding us, and they're depleting assets. As they're gone and being depleted, those companies are going to become more aggressive, whether it's Newmont or Barrick, because they need to feed the mills. So we're a supplier of ore.
Okay, well, is there anything that I've missed? I often do.
No, just for people to look at the underlying value of the company and where we're going. I mean, we don't see any surprises in what we're doing. We're just upgrading the ounces. And so if you're willing to be patient, you should be rewarded in the next few years.
So if people want to learn more about Coral Gold, they can go to your website, or you guys run a pretty lean operation, so are you sometimes available?
Oh yeah, absolutely. They can call the office or go to the website and shoot us an email. It's coralgold.com.
Okay. Well, thank you very much, David Wolfin. I'm Mike Niehuser with Beacon Rock Research, and it's Coral Gold, CLH, on the Toronto Venture Exchange. Thank you very much, David.
Thank you.